Hello, and welcome to another episode of the Market Pulse series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So today, we will be looking at the major events of the week. We've had three central banks announcing interest rate decisions this week. And of course, we have had a couple of job reports coming in from both New Zealand as well as the US. And we'll be going through that to try and understand the effect on the markets. And of course, we'll try to make some projections on what might happen on the key event happening tomorrow, which is the US non-farm payrolls. So at the same time, we'll also be looking at a couple of charts. We'll be looking at the major currency pairs. We'll be looking at gold, oil, and major stock market indices to try and understand the prevailing trends and identify where the opportunities may be, as well as the key price levels. So hello, J-Squad, hello, Richie. Thank you for joining the session. I appreciate having you guys in these sessions. So as always, remember to comment on the live comment section once you join. And if you have any questions or comments, feel free to type them and I'll be responding to them as we go. So first things first, we take a quick overview of the economic calendar and see what has been the major thing in the markets. So I think we have covered a majority of this in the daily market snapshot series. So for those who are just joining or you haven't met the market snapshots, you should know that we do daily sessions every day, Monday to Friday at exactly 11 a.m., covering what's currently happening in the markets. And during those snapshots, we're able to identify various market patterns as well as potential trading opportunities. So I think among the key highlights we have seen for the week is one, the Bank of Japan maintaining interest rates at the current level of negative 0.10%. But then we are seeing the Bank of Japan easing on the yield curve control program. So for those who are new to the yield curve control program, it's a program where the Bank of Japan decided to control the yield in the 10-year government bonds, making sure that they don't exceed a certain limit. So at the beginning of the year and last year, it was 0.25% plus or minus. So if bond yields would go to plus 0.25%, then the Bank of Japan would literally print money and absorb all the demand to make sure that these yields remain at the same level. So earlier this year, this was moved to double to 0.50%. Then later on moved to 1.0%. So in the most recent meeting, the Bank of Japan basically decided to change the policy stance on the 1% limit from a hard cap to a flexible limit. This means that the yields can now be allowed to move slightly above 1%. And this basically indicates the gradual process that the Bank of Japan is taking in removing its yield curve control program. So if they keep on expanding that limit higher and higher, then eventually the yields will be open to free market, that is demand and supply. And as a result of that, then the Bank of Japan will be printing less and less money. However, we saw this morning the Bank of Japan announcing that it's looking to pass a bill that will allow it to basically print billions of dollars to address the current high inflation environment. So as you all know, in terms of fighting inflation, you do that by tightening and removing the excess liquidity. But if you're spending money to address inflation, then that doesn't usually work. Basically leads to higher inflation. So upon that announcement, what we have seen with the Bank of Japan and the USD JPY currency pair is the market basically accelerating all the way up. And this was on Tuesday. Then on Wednesday, we saw the prices pulling back downwards. And then today, we had some further downward momentum before the market found support around this area and started going up. So zooming out from this chart, you can notice that this area was a previous high, and now it's basically currently acting as the support level. So we had identified this area as a good support area for USD JPY, though later on the market kept going down before finding yet another entry by buyers and now prices are on the upper side. So perhaps towards the end of the day, we could be seeing some further upside in USDN. And as I've already mentioned, as long as the monetary policy between the two economies hasn't changed, then there's that likelihood that the strong dollar will keep on pressurizing the Japanese yen. So from the daily chart, this is how it looks like. So it's basically a market that has been extremely strong for the better part of the year. So right from January of this year, this is where the year started. You can see the market slightly went down, and then for the rest of the year, there has been all bullish momentum. So we're already hitting the high, almost hitting the high that we saw last year. And this is evidence of how a divergence in two monetary policies can lead to a strong bullish momentum in a currency pair. So in this case, after seeing this strong bounce, then there's that likelihood that we'll be seeing some much higher prices. And of course, on the forward chart, you can see it's a pretty strong bullish engulfing pattern. The two candlesticks indicate a very strong entry by buyers, and it's a book pattern called a bullish engulfing, which often indicates that the market may be on the verge of a reversal, and we could be seeing some further upside in the USD JPY currency pair. So as for now, I think it's reasonable to assume that we'll be seeing more upside. So the most recent high that we saw last week was around 150.769. So there's that potential that the USDN could at least towards the end of the day and the beginning of the Sydney session, we could be seeing 150.769 again. So besides that, we've had a couple of more announcements happening in the week. So we have had one, Canadian GDP coming in at 0.0%, US employment cost index rising slightly to 1.1%, CB consumer confidence coming in at 102.6, which is higher than the expectation, but slightly lower than the previous reading. So New Zealand jobs data came in weaker than expected at negative 0.2%. And of course, unemployment rate rose from 3.6% to 3.9%. So ADP non-farm payrolls missed expectations, but were higher than the previous number, coming in at 113K jobs versus an expectation of 149K jobs. But then these were still significantly higher than the previous reading, which was 89K jobs. So JOLTS job openings on the upside at 9.55 million. This was higher than the previous reading of 9.5, and of course higher than the expectation. So what we are seeing here is the job openings basically recovering after dropping in the last 3 months. So if I was to use a line chart here, then it would be very clear that the job openings had dipped below 9 million for a while. Then we saw a recovery in the last 1 month. And then in the report that happened this week, we're still seeing some more upside in job openings. So this basically means that the job market is currently pretty strong in the US. And when job openings are high, it basically means that employers are looking towards expansion. That's why they're hiring even more people, which basically implies that the economy is strong. So besides that, we also had the Fed decision. That was on Wednesday, that is yesterday. So the Fed decided to hold interest rates level at 5.50%. And this is becoming a trend. We saw the ECB also holding interest rates level, the Reserve Bank of Australia, as well as the Reserve Bank of New Zealand. And with this trend, it basically means that the major central banks are generally holding interest rates steady at this rate, waiting to get more data so that they can decide whether to continue the tightening policy or whether they should be considering rate cuts in the near future. So from the Fed chair, Jerome Powell, he basically said that rate cuts are not in the books. They're not planning to do rate cuts anytime soon. So what the Fed chair basically presented to the market is basically an open book, basically meaning that if more data comes and it indicates a much stronger economy and rising inflation, then there's a likelihood that the Fed could go for another rate hike, and we could be seeing rates moving to 5.75% or even higher. So for now, it's the same talk that the Fed chair has been saying. We watch the data. So it's basically a data-dependent approach. So fast forward to today, We had CPI coming in from Switzerland, which was at 0.1% as expected, but also an improvement from the previous reading, which was negative 0.1%. So going forward, we had the major news for the day, which was the Bank of England interest rate decision, which also decided to hold interest rates at the current level of 5.25%. So in the previous decision, we had 5 members out of 9 voting for holding interest rates level at the 5.25% versus 4 members voting for a rate hike. So what we saw here, it's a divided monetary policy committee in the UK, but then we expected that 2 members had flipped, and now we have 7 going for a rate holding. But then the actual result was 1 member who flipped, and now we had 6 members supporting holding interest rate steady, and 3 supporting a rate hike. Of course, the democratic decision holds. So in this case, the majority, which was 6 members, basically passed the decision for 5.25% rate being held. So from the speech that we heard later on from the Bank of England Governor Bailey, he basically mentioned that inflation is still significantly high, and they're expecting it to be dropping downwards towards the 2% target. So in the previous reading, inflation in the UK was at 6.7%. So that is significantly high and way higher than the Bank of England target of 2%. So in this case, there's that potential that the Bank of England may be forced to hike rates higher, and that could be happening in early 2024. So in this case, what we are seeing is a central bank that is not aggressive enough in addressing the high inflation environment, and investors are already questioning this. So we'll be looking at this shortly as we get into the charts. So going forward, we will be looking at a speech from SNB Chairman Jordan. This already started at 8 p.m., so you can check it live after this session. Then tomorrow, the big news for the day will be, of course, the jobs data from Canada, as well as the jobs data from the US, followed by the ISM services PMI. So key focus for the day will be the non-farm employment change, where we're expecting 178K jobs were created in the month of October for the US, compared to the previous readings, which was 336K jobs. So average hourly earnings are expected to have increased by 0.3% compared to the previous increase of 0.2%. Unemployment rate in Canada is expected to worsen to 5.6%, whereas for the US is expected to remain at the same level. So this is expected to be a big market mover for the US dollar, and a lot of investors will be focused on it. So going forward, we also look at a couple of charts. I think the most important one is the dollar index, which was largely weakening since yesterday evening after the announcement of the interest rate decision by the Fed, leading to a big sell-off in the dollar index. And then today, in the morning hours, it was slightly moving sideways. If you go to the 50-minute chart, you can see this is the Sydney session. And then towards the end of the Tokyo session, we saw the dollar index starting to weaken. Then in the London session, we had even further sell-off. But then coming back to the New York session, the dollar started recovering. And this is what we are seeing on the 1-hour chart, which is basically around about a V-shaped recovery. So we are seeing a very strong dollar that is making a recovery from yesterday's sell-off. And this momentum could continue towards the end of the day and end of the week. And in this case, recovering strong dollar would have a couple of implications in the market. So first implication is the pound USD, which was basically gaining, especially after the announcement of the interest rate decision. So upon hitting the upper trend line, and this is something we have been discussing on the snapshots, the pound was unable to break and move higher. So the overall result that we saw here is basically the market failing to go higher and immediately moving back downwards. And now the overall thesis is that there is that potential that the pound USD will start moving further back downwards. So now this emerges as a major trend line on the 1-hour chart, where it's acting as the resistance, and on the lower side, we have a trend line acting as the support. So with this in mind, knowing that the market has been oscillating between these two, then there's a good chance that we could be seeing the market headed further back downwards towards the lower trend line. So this may become a real possibility as we approach the end of the week and the dollar regains its strength. So as for the Euro USD, we are seeing a similar kind of pattern or formation. So a market that was generally moving upwards in this channel, but then upon hitting this area here, there was a slight break, which did not continue. Eventually, the Euro found some support around this area and kept going up. And then once it got to this area, found resistance, sellers came in and pushed prices down, broke the trend line again and went to this support. So this area seems like a pretty significant area for Euro USD traders. And now, after seeing this area here, notice how the price rallied from yesterday, went all the way to the upper trend line. And upon hitting this area, there was an immediate rejection. And as the dollar strengthens, what we are seeing here is the market now pulling back downwards along this trend line. So there's that potential that as we approach the end of the week, we could be seeing the Euro USD retesting 1.05978. And if the momentum is enough, we could be seeing a further sell off to 1.05322. So as for USD CAD, the weakness in the dollar led to a big sell-off. And of course, we had a major trend line holding here as support. And the moment that trend line was broken, there was an acceleration of price further back downwards. And now we have even broken the support and the market is headed lower. So in this case, we could be seeing the Canadian dollar strengthening against the dollar and eventually getting to this area, which was the previous resistance and now turned into a support area. So the target now becomes 1.37347 for USD CAD short sellers. So as for gold, we had some projections in the morning. So we had this triangle where the market was just trading sideways. Eventually, it made a break towards the upper side, and the projection was that it could hit the previous high that we saw yesterday of 1992.65. So unfortunately, gold did not rally enough to get to that area. So once it got to this area, there was a big sell-off, market goes back downwards and then up. And if you compare the opening price of the day and the current price, it's almost equal, basically meaning that gold has been trading sideways for the day. So in this case, if we now eliminate our area analysis because it did not play out, then in this case, we might want to look at the key price levels that are determining market momentum. So on the upper side, I would say this area here is pretty significant as a resistance. And then if you are thinking of support, we have this area here. Sorry. So we have this area here, and of course, yesterday's low acting as significant areas of target. So the areas of interest for gold on the lower side is 1969, slightly higher at 1975. And of course, the day's high, which is also similar to yesterday's high, around 1990. So in this case, it doesn't make in a sense to trade in between, since I would say this is a ranging market. So from this area here going this way, you can all see it's almost a rectangular play where the market is moving down, up, without making any significant direction. So in this case, the areas of interest would be if the market gets to 1990, or if it gets to a bottom of 1975, then perhaps we'll be able to identify trading opportunities there. So as for AUD-USD, we saw a very strong rally, which got to the interest of the last 4 weeks high. But then once it got there, there was an immediate rejection as the dollar started strengthening, and now there is that potential opportunity that the AUD-USD could be dropping further back downwards. And if the dollar continues strengthening, then this might be a very interesting area to observe, which is 0.63884. Then we have the UT100 or the NASDAQ, which basically has made some good rally over the last 5 days. So from Friday last week, Monday, Tuesday, Wednesday, and today being Thursday, we are seeing a very strong momentum, which is in line with this particular pattern that we have been observing since hitting the yearly high. And this was on the 19th of July. So since hitting this high, the market went down and then up and then down and then up, then down, and now we are currently on an upswing. So this rally is pretty much strong, and I expect that the market could potentially get to this resistance here. And once we get to that area, then we might consider now start looking for short selling positions in line with the bearish channel that you've been observing here. So in this case, if you've been buying the NASDAQ, congratulations, because you understood we are now on an upswing. And in this case, there's still more room for upside, where we could be seeing the NASDAQ continuing to rally and getting to this particular area here. So since the NASDAQ is basically tech dominated, we know that a couple of big tech companies have already reported their earnings, their quarter 3 earnings. So we saw Google beating earnings, Meta platforms of Facebook beating their earnings, Microsoft having one of the best earnings on record. And now we are looking, we also saw Amazon, which was also really good. And now we are looking at one more giant company, which is Apple, which will be reporting today after market. So by after market, I mean after 11 p.m. And when that happens, investors will be closely watching to see how the uptake of the iPhone 15 has performed. They also want to see how how the Apple devices have been selling in China, which is the biggest market for Apple. So that report will be very important for Apple investors, and it could propel the NASDAQ even higher towards this particular target. So as for the Dow Jones, we are seeing also a very strong momentum upside. So in this case, I expect some further rally towards 34,152. And of course, we all know that the trend line is still present. So the market could potentially get to this trend line, which has been acting as resistance since we saw the highest price of the Dow for the year, and this was back on 27th July. So we are seeing a pretty strong momentum, and now the market could be hitting that 4,152. So as for US 500 or the NASDAQ, sorry, US 500 or the S&P 500, we are seeing a similar thing, the market finding a very strong trend line around this area here. And now we are currently on a rally after a big extended move downside. So in this case, the momentum could continue with very short-term targets at 43.55 and even higher for the S&P 500. So we could be seeing this area here, which was acting as support, turning out to be the resistance for the market. But then also there's more levels, including these highs that we saw here. So very short-term target is 43.34, but then from a technical perspective, 43.95 is a logical zone. So as for oil, our projections are played out right. This is something we did early this morning, learning that this area was acting as a major support level. And now that the market had bounced from the lower trend line, you are expecting the price to rally all the way up and get to $86.547 dollars per barrel. So now the market is approaching the upper trend line, which has been pretty consistent for Brent oil. And now once you get to this area, it's an area of interest that you want to see where the market could be strong enough and break above this area here. But then there's also that potential weakness and the market goes back downwards. So one key thing to notice is that as the market kept going downwards, it formed 3 basic lows that are not significantly lower than each other, which is usually an indication of weakness in the markets. So you might think of it as a triple bottom, and this could be the bouncing point for Brent oil. And then if we have a breakout above this trend line, then it would confirm the thesis, basically indicating that there is more room for upside for Brent oil traders. So it was just a couple of weeks ago that we saw oil trading at $95 per barrel, and we could be seeing the market getting back to that area. So at this price level, this was a 94.9. So the highest price that we saw is 95.129. So if the price manages to break this area here, then another rally could suffice. And of course, we know that there's fears that oil supply could be disrupted, especially in the Middle East region, as a result of the current crisis between Israel and Palestine. So further escalation would risk disrupting oil supply, and this could lead to higher prices. And of course, the strong GDP data coming in from the US was also bullish for oil because US is a major consumer of oil. So if the economy is performing really well, then the demand for oil will also be significantly higher. So European equity indices have not been left outside. So we had this breakout happening earlier in the day, and French 40 index has rallied since then. So it has been a pretty strong momentum, and the market rallied all the way up. And of course, the target was 1794, which has already been hit. So this area was acting as a major support level for the French 40 index. And now the market has rallied all the way up, and we are seeing the market taking a pause after getting to this area. However, the momentum is still strong, so we observe this area for potential break higher so that we can continue squeezing in bullish positions. For the Euro 50 index, or the Euro Stocks 50 cash index, we saw a very strong rally. The market eventually got to the upper trend line, broke higher, and now there's a potential that we could be seeing some even higher prices. So judging by the same measure we have used for the French 40 index, this was a major support level for the index, and now we are getting back to the same level. So that may explain why we had a slight pause around this area. So we observe 41.81 as a potential stop, and if the market breaches this area, then we might continue squeezing bullish positions. So as for the UK 100 index, it was literally trading on this area here. So if we say that this was the overall price action, then the breakout happened yesterday, a retest, and then a continuation higher. And of course, we can already see this is seemingly looking like a inverted head and shoulder pattern, where if we were to use this as our neckline, then you'd notice the actions that have happened to the price. So clearly, this is a momentum this way, and then this way, this being the head, then back to the neckline, and of course, the tail, and the market completes the pattern. So after this breakout, we are seeing acceleration of price. And of course, the next target seems to be on the other side, around 7,518. So we could be seeing some further upside on the FTSE 100 as we approach the end of the week. So there's a question here from JSCode. Discuss the gap on DXY that happened today. Where is that? I don't see any gap that happened on DXY. That would be weird. No single gap here on my chart. You might be using a different broker that gave you a gap, but personally I don't see any gap. If you are to give me unsolicited advice on how to trade your style, what would you insist I focus on? So try and focus less on the events currently happening, especially on the news, less on the economic calendar, and more on price, especially on overextended prices. So if you see an asset that is trading at an overextended price, maybe overextended downwards or overextended upwards, then that tends to represent a very good opportunity. So a key running point you might consider is something like the recent price action on the US equity indices. So for instance, look at this. This is the US 500. This is our upper trend line. But then if you look at the lower trend line, from this low down to this other low, then you can see that at this point, there was an overextension of price. And immediately after that, you can see the kind of price action that emerged from this overextension downwards, which led to a very strong bullish momentum. So that might be something you might want to consider, study, backtest, and if it works for you, then it might present some good trading opportunities. So hi Kennedy and Humphrey. I can see Hack Fluent. We had names on the comment section. So thank you very much, guys. Thank you for your time. If you haven't watched the latest episode of the Bullish Banter podcast, make sure to check it out. And I appreciate you all. I appreciate you for taking your time to listen in. Make sure to share the webinar to other traders so that they can also benefit. And of course, subscribe to the channel so that you can get notifications whenever we go live. The insights are marvelous. Thank you, Eugene. Appreciate this. So enjoy your evening. And I believe the rally in equities is something to think about because it's not overextended yet and there's still more room for upside. So you might want to consider looking at that. So while gold is majorly trading sideways, I don't think there's any opportunities as per now. But then for indices, they really seem interesting. And of course, for Brent oil, this momentum and this price action level is something you want to consider. So you want to see whether there's evidence of Brent oil breaking above this area. And if that happens, then it could lead to a nice rally and break out above this area. So just watch the 86.9 price level for Brent oil. And if there's a clean break, then you might enjoy trading a position here where we have a very clean, I would say a very clean evidence of buyers entering this market. So for the last 5 hours, very strong momentum upwards. So in this case, a clean break would mean a very strong rally happening in Brent oil. So at what time do you start the live webinar? This always starts at 11 a.m. Monday to Friday, and it's called the Market Snapshot Series. You can subscribe to this channel, and whenever the webinar starts, you'll get a notification. Of course, for the Thursday webinar that happens at 8 p.m., it's a weekly webinar. So every Thursday at 8 p.m., that's when we do this Market Pulse series.